especially on set. So let's start here. When you power rank the Mag 7, my friend, how do you power rank? What are the variables, the metrics? What are you screening for?
This falls right in line with the conversation you've been having all afternoon. It's about the monetization of AI. That's certainly the next wave of where revenue growth is going to come from. And we look at it through a lens of two different metrics: short term in the next couple of quarters versus the next couple of years. Who is actually capitalizing on this AI monetization program? So that's what we're looking at and looking for. It leads to earnings growth, which we all want to see, but also earnings durability over that long period of time.
So perhaps let's get into some of these. Perhaps not surprising. Number one, Nvidia, Jensen Huang, powerhouse. Walk us through it.
When you just look at what the asset flow of AI is going to look like, it's going to start with hardware makers like Nvidia. They have the most functioning hardware that is in the most demand at this point in time, and that leads to the highest level of earnings growth and earnings durability. So you're talking about the next 2 to 3 years of earnings growth at 28% or plus. That certainly leads the pack for us.
Dan, I want to bring you in here. It wasn't so long ago. There were some questions about Nvidia. There were some skeptics. They were coming on my show, Dan. They were saying, you know what, 2025, maybe this is peak AI CapEx spend.
Yeah, I can't believe how many people were so wrong in so many different ways. The DeepSeek moment, didn't do the research, didn't realize how much Nvidia, billions of Nvidia was actually sitting behind it. It wasn't $7 million training these models. They thought the China risk was bigger when that export control went into place. But the demand in the global market, whether it's been Middle East, whether it's been here in the US, you hear Sam Altman and Elon Musk, they may not get along, but they will both acknowledge that their GPUs are melting because they literally can't get their hands on enough hardware. So the demand is so large, the margins are so high, and the diversification risk, meaning going to an AMD, is still too hard. You're seeing little bits. The inference era will pivot this just a little bit. But overall, they still control the market. They control the margins. And everyone that uses NVIDIA is at Jensen's door asking him for more. They're not selling. They're literally delivering.
Number two.
Now the biggest corporation in the world, NVIDIA has a significant lead over second-place Microsoft. Although NVIDIA has already had an amazing run, there are concerns about how much more it can expand in the upcoming years. I think there is still a lot of space for the stock to rise over the coming years, and if some predictions come true, a market valuation of almost $7 trillion might be achievable by 2028. That suggests a significant increase from the current $4.2 trillion valuation, which makes NVIDIA a good investment to contemplate right away. Thanks to the success of its graphics processing units, GPUs, NVIDIA has grown to become the largest company in the world. Although GPUs were first created to process graphics for gaming, their applications have significantly increased since then. GPUs are helpful for any task requiring a lot of processing power, whether it's mining cryptocurrency, building engineering simulations, or training artificial intelligence, AI models. GPUs excel at these jobs because they can conduct several calculations in parallel. Furthermore, clusters of GPUs are even more potent. A few businesses have built clusters with at least 100,000 GPUs. The market is dominated by NVIDIA's GPUs. According to most estimates, the business holds a 90% market share in data centers. For comparison, the market share of Alphabet's Google search engine is comparable. Additionally, NVIDIA's success extends outside the United States. Despite being manufactured with less processing power and performance than chips sold in other markets to comply with U.S. export regulations, its H20 GPUs were extremely popular in China. But in the first quarter, Washington also decided that such chips could not be transported. With assurances from the U.S. authorities that the license will be approved, NVIDIA intends to reapply for an export license. NVIDIA will be able to compete in one of the two biggest markets for AI computing thanks to this, which is fantastic news for the firm. Although NVIDIA's dominance is clear, investors are more concerned with the future. NVIDIA mentioned a third-party industry forecast during its 2025 GPU Technology Conference, which predicted that data center capital expenditures will increase from $400 billion in 2024 to $1 trillion by 2028. Currently, NVIDIA obtains a sizable portion of those capital expenditures for its GPUs, given that it generated $115 billion from data centers during FY 2025, which includes almost all of 2024. Assuming that this estimate is correct, and that NVIDIA will continue to hold a portion of the data center capital expenditure pie, the company's projection of $288 billion in data center revenue by the end of 2028, roughly equivalent to its FY 2029, is not out of the question. In a recent CNBC show, Dan Niles, the founder and portfolio manager of Niles Investment Management, stated that he became optimistic about Nvidia for two reasons. The first was the company's write-down in China following tighter limits on the selling of AI chips by the US government. The second dealt with how demand is fueled by the fundamental dynamics of the AI sector. Spending on training is decreasing, but inference spending is finally increasing. This implies that individuals are using ChatGPT, OpenAI, and Gemini, which is the one I use most frequently. Most likely, I use it 10 to 20 times every day. Additionally, you had inference demand begin to take off. In May, Google reported that the number of tokens they were producing had increased 50 times over the previous year. Then, in 2022, Microsoft, which had evidently invested in OpenAI in 2019 before any of us had heard of ChatGPT, said that they had increased the quantity of tokens they were producing by 5 times. When you combine all of that, businesses predict de-risks due to the significant write-down, part of the demand for sovereign AI during President Trump's trip to the Middle East and all of these transactions. Due to the high demand for its processors, even its detractors are becoming more optimistic, bringing Nvidia back into the game. Leading the global AI push, Nvidia is a market leader in computer graphics processors, chipsets, and associated software. Its first quarter fiscal 2026 profits, which included non-GAAP per share earnings of $0.81 and quarterly revenue of $44.1 billion, exceeded forecasts. It's no surprise that Nvidia's stock has risen 24% so far this year and may continue to grow. Data demonstrates how big money investors are placing significant bets on the stock once more. Numerous things are revealed in institutional volumes. Nvidia has experienced high investor demand over the past year, which we assume is institutional support. Unusually high Nvidia share volumes are indicated by each green bar. They push the stock higher by reflecting our own inflow signal. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video. There are now a lot of technology names being accumulated. However, there is a compelling core narrative involving Nvidia. It is worthwhile to look into this company because of its institutional support and sound foundation. As you can see, Nvidia's earnings and sales have grown significantly. 3-year EPS growth rate, plus 225.9%, 3-year sales growth rate, plus 80.1%. Additionally, EPS is predicted to increase by plus 34.1% this year. The reason why the stock has been attracting big money attention now makes clear. Nvidia has a history of achieving impressive financial results. Over time, some large winning stocks have been discovered by combining software with sound fundamentals. For many years, Nvidia has been a highly regarded stock. This indicates that the stock's fundamentals are improving and that there is unusual buy pressure. Every week, stocks like this are highlighted by our rating methodology. Since its initial appearance on the Uncommon Outlier 20 report in June 2000, it has increased by 64,948%. The blue bars below indicate the periods during the previous 5 years when Nvidia was a top pick, gaining 1,148% throughout that time. Big money adores it. The strength of money flows can be seen by tracking anomalous volumes. The majority of outlier stocks, the best of the best, display this characteristic. Demand from big money propels stock prices higher. There is nothing new about the Nvidia action. The shares purchased by big money is a warning to pay attention. This stock can merit a place in a diversified portfolio due to its solid fundamentals and record price increases. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Talk about this focus on Taiwan and the headlines that we've been getting out from the island this week and the AI supercomputer that Nvidia wants to build together with the government, TSMC, and Hon Hai. What does this say about the epicenter of the tech world in Taiwan?
Well, it certainly suggests that it's going to stay there for a while. It's worth noting that at the same time that they want to build a supercomputer, Elon is saying XAI intends to build a supercomputer in Memphis. Korea has said they're going to build a supercomputer. I think they pledged $570 billion to a supercomputer. And of course, Japan has signaled the same thing. Taiwan has, as you and I both know, a unique advantage in this because they're manufacturing most of these chips. But it is a signal that everyone sees the importance of building supercompute as a sovereign interest, in addition to the energy that's going to be required to run it.
So what about China in terms of the supercomputer space? It doesn't have the access to the most leading edge chips. So is it going to be able to survive? Is it going to be able to last and be able to compete?
So there are, I think, two things to consider here. One is how much can anyone actually achieve the ambitions of supercomputing, right? If Elon says, I want to install a million chips in my Memphis facility, how many of those will he actually acquire? If Korea says, I want to invest $570 billion in supercompute, how much of that will actually go towards it? That's a big question, because you can say you want to spend a bunch of money, but if the resource is already scarce, there's only so much you can. The bigger question, and I think the one that you're asking and a lot of people are asking, is to what extent will a supercomputer actually differentiate? And is it of critical sovereign importance actually to have your own compute? And I don't know what the answer is, frankly. If the answer were that obvious, then I think it would be very fair to say, oh, well, China's in a lot of trouble because they can't access the chips that are necessary. But two things are also true. One is scarcity breeds innovation. DeepSeek proved this. We didn't think that they had the compute necessary to build a state-of-the-art model. They did. Then they built a state-of-the-art model that required a lot less compute on an inference basis, and so actually sort of recalibrated to us, the rest of the world, what we thought was necessary. And that's why we saw this market capitulation. There is a non-zero chance that China, as a result of this scarcity crunch, says, hey, we're going to reinvent the architecture. We're actually going to create a world where we're not in a losing game because we're going to change the rules or the nature of the game. And that seems very possible. And especially in a world where we decide AI is of critical importance, they're not going to just sit around and say, well, too bad, we're going to lose the race. I would also note, and I think that this is important, it does seem like there is an increasing amount of comfort with the world starting to distribute, and even some of the current chip sanctions seem to be being lifted. And some of these trade negotiations almost certainly include. So there's a good chance that this looks a lot more, we see a lot more parity over the next 12 months.